Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 5th of February, 2022, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of February. And let's begin with the Euro, where we see that it has recovered the full drop from over a couple of weeks ago, and rallied strongly on Thursday, especially after the ECB rate decisions and announcements, and recovered the full drop right back up to the test the high, the recent high in middle of January. So that was the 2 weeks drop, and recovered all fully within a week. And we'll cover the ECB decisions, but for now, let's move back this resistance zone back to this. There's already a zone back up here, and likely another one up here at the 200 EMA. So let's make sure we have this resistance zone here. That's at the previous swing low. That's at 115.25. And this support is safe. Didn't have to worry about that. Let's move that to this move on Thursday, from the start of that move. So likely at this 78.6 Fib retracement level. All right, and what we can do is let's move this Fib right over here to this swing area, swing move down and then back up. And let's see if there's any, there could be this support zone here at the 162 Fib extension of this swing move down, and also the 50 Fib retracement. And if it does break this 0.0 at 115, a key round figure resistance, it could very well target this 78.6 retracement as well as this 138 Fib extension. So this is going to be a fairly wide range, but this was the previous resistance here, and could just pull back first to retest this support and test the resistance. I'm not sure whether it's going to be able to break through, or whether it's just going to pull back and consolidate in this zone between this swing low 115.25 and the 138 Fib here at 113.80, let's call it. Okay, perhaps let's move this support probably a bit higher. That's the first support here. And it did break above this rising trend line as well, but and there's also a daily 55 EMA for support below that. So let's leave this here first at the 113.80. So this is going to be the major resistance. There's a intermediate resistance here. And this is going to be the near-term support, followed by another 38-Fib retracement back down here. Okay, so what triggered the move by the ECB was that they did acknowledge that the inflation is rising, and it's possible that they could increase rates at a higher rate than expected for this year. Previously, traders were expecting probably a 25 basis points increase, but now it's possible that they're looking at ECB to increase rates at 40 basis points by the end of the year from the current negative rate now. So that pushed the euro through all these resistance zones and retest this high by Friday. So even with the non-farm payroll report from the US on Friday, where it did record a much stronger figure than expected, euro did manage to recover back up, recover the fall. So see how strong that support is going to be going into next week. And there's no major news for the Eurozone next week. And key news from the US will be the CPI figure that could trigger further US dollar moves following the non-farm payroll data. Okay, let's also take a look at the weekly time frame, where you can see the strong bullish engulfing candle and a strong close for the week. So suggesting there's going to be some bullish continuation move into this weekly 200 EMA and also the weekly 55 EMA coming together into this confluence of the two Fibs. So this resistance zone could be the key resistance area. So that's going to be at the just over the 116.20 area. Let's identify another round figure, 116 here. So it's from the 116.07 to the 116.21. But basically at the 116 area. Okay, let's also take a look at the US dollar index, where it did not continue after the doji on the Friday, and starting from the Monday, it formed from the evening doji star bearish formation and continued lower until the Friday's NFP, and managed to find support at the 21 Fib tracement here. So it's fairly bearish for the week, and did not find support at all at these levels, and also even at this critical support zone. So this is going to be resistance now. Let's take this one out. This zone is be resistance as well. And below that, we need to identify this support zone now. This at a critical level at this previous swing low, along with the 21-Fib retracement. So this is a support zone. And if it does break that, below that, there's a key support at this swing high here. All right, so unfortunately, the US dollar could not sustain its bullish breakout, and has fallen back below a key support. So let's see if it's able to recover next week. And needs to target back up above the 96.00 figure. And the CPI figure is going to be released on Thursday, so we'll need to see whether there's any higher figure than expected that would support the Fed in a rate hike in coming March meeting. Okay, let's move on to the cable. Where on Thursday, just 45 minutes before the ECB, the Bank of England did raise interest rates from 0.25 to 0.5%. And this allowed it to move up somewhat, but restricted movement because it had already moved prior to the news. So it did break through the resistance zone at the daily 55 and attempted to punch through the daily 200 EMA. But then fell back on the Friday with the US non-farm payroll figures and fell back into what was supposed to be the resistance zone, is now going to be support. The support zone is safe. And up here is going to be the near-term resistance. At the 78.6 Fib retracement of this swing move down. And if it does push up higher, depending on the US dollar's movement next week, and that's a key resistance zone up above here at the 138.00. It's going to be pretty high. So for now, it's finding support at the 135.00, back down to the key round figure, and that's where the 50-Fib retracement is as well. So this support needs to hold, and likely it may consolidate within this range. So depending on how strong the US dollar is next week, not sure if it's able to push the cable back down to the 38-Fib at the 134.18. But this is going to be the critical support now. And Friday there's only minor news with the preliminary GDP figure. So it's also going to be exposed to the US CPI figure on Thursday first to see what the impact is on the cable. On the weekly time frame, you see that's where it bounced off from the end of last week, from the weekly 200 EMA, bounced higher to try to break out above the weekly 55 EMA, but that's preventing it from going up higher. Okay. Let's move on to the Aussie dollar. And the Aussie dollar did have a central bank decision as well on Tuesday. And this was the trigger from the RBA, which did not raise any rates, but did mention that there is still opportunity for possible rate hike later in the year, and traders are probably looking for second half and perhaps in August. But for now, the rates are still will remain. RBA did mention that they will not raise rates in the near future. So it did manage support from the end of last week, and was a retracement of this move down. We can actually move this Fib over here, and that's where the 50-Fib retracement is. Spike through, and with a spinning top on the Thursday before turning back down on Friday with the non-farm payroll data. So this is still going to be a resistance zone at the round figure of 71.00. Now, not sure whether there's going to be a bearish continuation move lower, and that's where the support is. Let's move this support higher here. And below that, there's a zone here with the 138-Fib extension here, just above the 68.00 well, but it has to break down below the key 70 round figure first, and the recent low at the 69.70 area. So that's going to be the resistance with support down at this swing low, and it could just consolidate for the week inside here. If it does break down, then that's going to target the 138 Fib extension. If it's unable to recover and break back up higher, then that's going to signal a weaker Aussie dollar for a while. And on the weekly time frame, yeah, I did attempt to recover the previous week's candle, previous week's drop, but was rejected on Friday. And in fact, was rejected right at this previous swing low here. Okay, so very critical to watch the US dollar movement next week. And if it's going to continue to recover, then the other major pairs may pull back lower, and especially the Aussie dollar, which is the last central bank of these four big ones that may look at interest rate hike. Bank of England has already done that, and FOMC, the Federal Reserve, is likely going to do that in March, and followed by ECB, and then the RBA. So the Aussie dollar is going to lag behind. Okay, so do check out my other videos on spot gold and dollar yen as well. Have a safe week and a good trading week, and cheers for now.